Have you ever entered a trade after a breakout only to see the market reverse and stop you out? It's frustrating, right? You think price is breaking out, but instead it's just a trap. The good news? There's a simple yet powerful strategy that helps you avoid false breakouts and enter trades with confidence. It's called the break and retest strategy. In this video, you'll learn how to identify a real break and retest setup, the best entry points to avoid false moves, how to trade it in both uptrends and downtrends, the biggest mistakes traders make and how to avoid them. By the end, you'll have a clear step-by-step plan to trade break and retest like a pro. Break and retest strategy is one of the most effective ways for you to enter trades with confidence while avoiding false breakouts. Instead of jumping in as soon as price breaks a level, you wait for a confirmation retest before making your move. Here's how you do it. Price breaks above a strong resistance level, signaling potential bullish momentum. Instead of entering immediately, you wait for price to pull back and retest that same level as new support. If price rejects the level, that's your confirmation to enter a buy trade. This approach helps you avoid false breakouts that trap early entries, trade with momentum instead of against it, and enter at a better price with a stronger risk-to-reward ratio. The same concept applies in a downtrend when price breaks a support level. Before you can fully apply this strategy, you need to understand the psychology behind the break and retest strategy. When price breaks above a key resistance level, it signals that buyers are in control, pushing the market higher. Traders who entered early, before the breakout, are now in profit. But here's the catch. Markets don't move in straight lines. As price climbs, those early buyers start selling to take their profits, causing a pullback. This isn't random, it's the result of traders closing their positions, which creates selling pressure and makes the market drop. Now, if you enter right after the breakout, you risk getting trapped as price pulls back. This is where most traders go wrong. The smart money, the same buyers who took profits at the top, are now looking for a new entry at a better price. And where's the best place to buy again? The previous resistance, which is now turning into support. Once price reaches that level and rejects it, it's a strong signal that buyers are stepping back in. That's your confirmation. If you enter here, you're trading with market momentum, not against it, and applying the break and retest strategy the right way. Now that you understand why this strategy works, let's move on to the foundation that makes it all possible: market structure. To trade the break and retest strategy effectively, you need to understand market structure. This helps you spot high probability setups and avoid unnecessary risks. The market moves in 3 phases, and in each one, price reacts differently to key levels. In an uptrend, price forms higher highs and higher lows, meaning buyers are in control. But here's what's really happening. Buyers buy low at key support levels and sell high as price moves up. Each resistance level that gets broken becomes a reference point, a place where buyers might look to enter again. When price pulls back to retest a broken resistance, buyers often step in, pushing price higher. That's why, in an uptrend, you don't just buy anywhere. You wait for price to retest a former resistance and show signs of rejection before entering. In a downtrend, price moves by creating a series of lower highs and lower lows, showing that sellers are in control. Here's what's happening behind the scenes. Sellers enter positions at key resistance levels and take profits by buying back at lower prices. Each time a support level is broken, it becomes a reference point where sellers might look to re-enter the market. When price pulls back to retest a broken support, sellers often step in again, driving price lower. That's why, in a downtrend, entering too early can be risky. You wait for price to retest a former support and confirm rejection before looking for a sell. In a range, price moves between support and resistance, meaning buyers and sellers are evenly matched. Unlike trends, a breakout alone isn't enough confirmation that price will continue in that direction. A breakout can be a fake move. This is why waiting for a pullback or retest is essential. If price breaks above the range and retests the previous resistance, it signals that buyers are gaining control. Without a retest, you're gambling on a breakout rather than trading with confirmation, and that's a mistake that traps many traders. Now that you understand market structure, let's focus on how to identify a high probability retest, because not every price pullback is a trade-worthy setup. To trade the break and retest strategy the right way, you need to focus on confirmation, not just the break of a level. Here's how you do it. Look for a well-defined key level where price has reacted multiple times in the past. Weak levels that price barely respected are more likely to fail. In this example, we have a key support level. Instead of entering immediately when price breaks the level, you wait for the market to pull back. This is where smart traders position themselves. Once price returns to the broken support, your job is to observe price action. You don't enter yet. You wait for confirmation that this level is now acting as new resistance. This is the key moment. If price rejects the level with strong price action patterns like pin bars, engulfing candles, or multiple wick rejections, it signals that sellers are stepping in to push price lower. Once rejection is confirmed, you enter a sell position, placing your stop loss above the retest level for protection.